Hi, good day all. Welcome to our 7th chapter of our Practical Finance course. Today we're going to cover the last part of the business case. Please stay tuned for both the dashboard and some hints of the sensitivity analysis, which will be covered in our next chapter. Okay, so join me at the Excel right now. Here you will see that I made some changes at the financials, and of course I did the dashboard already. You're gonna love it. Please join me at the Excel. Okay, so we did a lot of changes. As you see, there are two different colors right now in each of the individual worksheets. For example, human resources have this in blue, light blue, and this in light green, which is the former one. So everything that is in light blue is tied to the dashboard. For example, the number of directors is not an input as it was formerly. It was in light green and it was a 1. And here was 4, 6, 7, 8, 8, but now it's tied to the dashboard as you see in the formula. Also the salaries, I mainly used one single input for the first year, and I assume that this will increase according to something I call the salaries increase, which is in the dashboard too. And investments, everything as you see here is in blue, so everything of this is in the dashboard. So no input from the user in this worksheet as well. In the market, of course, there are things that don't require to be in the dashboard because there are things that do not change much, like the population of the United States on the first year of your project, and the average consumption per person and its increase per year, and the average market price per liter of the water, as well as the price increase per year, should be kept constant. Everything else here, as you see, is in light blue, and there's an exception here. Well, the amount of hours your factory is working, and all this is in blue. All this is from the dashboard. Everything you see in light blue, as you see, the formula is from the dashboard that you will see in a minute. The financials, all the changes I made, well, besides the light blue things and the green things that are still here as an input from the user, as you see. Everything here is I added an extra lines here, as you will see in a minute here, which are some important index that we need to have so as to understand the results of anything I change in the assumptions. What effects does it have in, for example, revenue growth, debt to equity ratio, return on equity, return on assets, the current ratio, or the quick ratio. Okay, so mainly these are things that you would require as an external result. The paid-in dividends, I just took it from the balance sheet right here, the paid-in dividends, but I did something interesting, which was to bring it to present value, because I would like to measure how much dividends I got paid throughout the 5 years, which is this number over here, and compare that with the initial investments that the stockholders paid at the beginning of the project, right? Like a profitability index. Also, I calculated one of the particular methods, the company value at year 5. This is an input here. Usually there are 5 years of EBITDA, year 5 EBITDA, but I put it here in 3. And what you do is that you add 5 times EBITDA or 3 times EBITDA of year 5, the current assets minus the liabilities, which in my case is negative, so it's a subtraction. Okay, also the important things like the lowest cash position, this is important, and you will see it also reflected in the dashboard because it will show you what is the lowest ending cash of the cash flow. When you want to set up both the loans right here and the paid-in capital, this number over here or this number over here, down here. Okay, so both the loan or the paid-in capital numbers that need to be fixed also in the dashboard. But you will need this number to understand what is the lowest cash position throughout the 60 months. So this is just the minimum value of those 60 months. The internal rate of return measured both in 3, 4, or 5 years, that is taking the line 53. I did the unlevered free cash flow, I mean taking away all the tax debt and financing. This is important for this formula over here. So this is taken 3 years, 36 months, and the next one is taken up to year 4 and to year 5. These are the same value because, as you will see in a minute, we have producing excellent cash flows, positive from the beginning. Just these 3 negative ones, the others are just big and positive operating cash flow, and also the unlevered free cash flow too. It's wonderful. One extra thing I did now that I see this negative. Did you remember the income tax? The income tax was set to be paid month by month, and actually you paid it once a year. So I put it in month 12 of each year, the payment of the income tax. So I need then to accommodate both the equation for the expenses payments here, that it used to have the line of the income tax, which is line 32. It was here before, and right now it's not right here, it's just on the collected revenues. So I opened up a new one in my account payables right here. You see right here it's a new line, which is the income tax payments. It's both generated, as you see, line 32 here, the income tax, and right here is, of course, on the month 12, right here you will see that it's the full first year of income tax. You go here to the right, you will see 000 until you reach month 24, that you will see the second year full of income tax. Okay, so that's mainly my changes. And of course, as you will see, there are still green things here in the financials, but there are some blue things that I think they are important to be in the dashboard. All this, as you see, it is in blue, it's now in the dashboard. So here's my beauty. So the dashboard is simply a place where you gather all your assumptions that, as you will see, they're in blue and bold as the normal convention, and the other things that are in black are calculated or taken from another worksheets. For example, the number of total employees, I think it's important to have it somewhere here in the dashboard, but it's calculated in the human resources worksheet. The number of directors is the only thing that I need to input, and also the span of control. Remember, I had a formula in the human resources that calculated the number of technicals, administrative, and staff depending on the size of your company. Well, that's still there, so I didn't touch it. So the way to calculate the number of total employees is right there in the human resources worksheet. So you only can change here the span of control. Okay, now the investments. Investments, let me take this one down so you could see the whole text. Okay, and in the investments, remember all this thing over here? Well, that's now here. That the amount of feet of pipes per each new bottles per minute. That means, remember the sizing of your factory. The filtering equipment too, that it was the research, which were 700 water filling per minute, or the bottles that are produced per minute, and all these 48, 12, 21. Well, that's what is here. So what you see, well, the only thing is that you have the initial purchase. Remember this right here, it's the initial with whatever you begin, and then the new equipment that you buy for each additional bottles per minute that you produce, and the price of each of these equipments are here. Okay, so all your investment can be controlled from this single dashboard. Okay, market I split it in two sections. As you see, here's the first sections that had to do with the liters per bottle, the price increase of the price per bottle, the liter per bottles, the price of each bottle, the price increase per year, and the production over the estimated sales. Let me remind you of that. Okay, here is the liters per bottle, and here is the production over the expected sales. Okay, so the second section of the market is, remember the market what we should attend, this 1 million inhabitants, and penetrate it beginning by 5% and then ending with 15% on year 5. That's mainly the market. In the finance, all the things that you saw in blue right here, all these things are now in the dashboard. Okay, not only this, but also the famous metrics where you could set up your payment terms and your revenue collection terms. Okay, I changed them a bit too. You would imagine, so why do you do this? Because in a single page you will have both control of the assumptions and you will see the results right away. And where are the results? The results are here. Okay, as you see, this is like a small income statement, a small balance sheet, small cash flow, some of the index I show you already, the dividends. Here is the calculation of some profitability issues, like what I told you, the internal rate of return, the net present value of after 5 years, the present value of these dividends, remember that I told you, and of course that profitability index, which is whatever you receive in 5 years of dividends divided by the capital that you, the 100,000 million. So you have to check up on this number, the lowest cash position that I told you. So for example, you don't have any loan, let's take it out. You will see that you are negative by almost $92,150. So you need some, of course, a little bit more, because you have to pay the interest of the loan. So if you put 100,000, this thing is still too low. See, you still need to have more. So that's why it was 105,000 in the loan. Of course, you could ask it to the investors right here instead of the ask it to the bank. You could do that, for example. I think instead of 100,000, you ask for 200,000, and see you don't have any more negative things. Actually, you are over $708,000. So you could ask for 195,000 to have a rounded value, 195,000 here, and still be positive in the lowest of their cash position. I think this is all right. Besides this profitability, the company value is just what you saw the financials. Let me take you there, which is just the sum of these two things. Okay, and also a small table here with the revenue growth, the revenue share that you calculated in the market section, and how much does the personal expense represent in terms of revenue. That's an important index that investors like to keep an eye on. Okay, the 4 simple graphs. One has to do with the revenues, the other with the EBITDA plus the percentage of the EBITDA, both related. The paid-in dividends, this is what your stockholders get every year, and the amount of investments per year. Okay, so that's mainly the dashboard. As you see, in a single page, you can control all of the assumptions, or at least the most important of the assumptions, and see how the results are affected. So you just play. For example, we could change the number of directors. Let's now have 2 directors. Maybe 2 of the stockholders want to be directors, and they may want to have a higher salary, better personnel. Right here. Maybe you're not that, let's leave it in 6, the span of control. So more employees, more expenses. The investments, okay, perhaps you do a bigger purchase at the beginning, maybe 2 of these filtering equipments instead of 1. This membrane filters 10, this is 4, and this is 6. Just double it. And okay, this is mainly constant because it's taken from the research I made. The liters per bottle, okay, just half a liter, that's cool. Maybe I cannot select this, let's put it 0.70, and I cannot increase the price, maybe I must reduce it. This is not much important. Of course, our revenues are being calculated this way. As you see, I remember the bad debt, which is right here. This must be the same number as what is left or not collected at the end of your project, right? So this number is not an input. As you see, it's not in blue. So it should be then calculated the difference in the, I put it here in less than 120 days. As you see, is the 100% minus all the other sales. So I think maybe I can be 70, 27, okay, and then 3%, which I don't collect. All this, of course, I don't have those wonderful suppliers I used to have before. Bottle cost, forget it, 75.25, and okay, let's leave it like that. So it should be worse than before, right? For example, look at this. This is $9 million, right? Okay, so forget about asking the stockholders only $200,000. Now I think you need at least almost $10 million. Okay, so imagine that you can only have 5 million from the stockholders, and the rest you have to ask it to the bank. So let's see how much is that. It's like around 5 million, maybe a bit more. Let's try 5.5 million. And still negative. Whoa! Oh, I see what's happening. I see what's happening. See, it's in the month 60. So what it means is that your project is returning negative values. Here is the graph. See, the EBITDA per year is all negative. Every time more negative. So what's happening is that you did a lot of investments. You have a heck of personnel, well paid, lots of them, but you are only taking 15% of 1 million inhabitants of an area. So you have to aim higher. You must at least begin with 10%, then you grow perhaps 5% a year. So you take 30% of the market, which is a higher market. Is, I don't know, you move to a bigger city, there where your plant is, and let's see how, okay, forget about the 0.70. See, your EBITDA is still negative. So you could sell that bottle $1 per bottle, and your prices may be constant. Okay, things are getting better, as you see. Okay, so this is bigger. It's 130 million. Now we're talking. Okay, so now let's forget about the loan or everything we did here, and whatever we asked to the investors, and see what is our cash position. So as you see, you need $300,000. That's all, and we're not going to ask anything to the banks. So we kept the 2 directors, the amount of employees, the inefficiency of our managers. With all that, our company is growing. So right now we have a good company that has a good cash position and could be valued at $141 million by the year 5. So as you see, dashboard is a great way to understand the company, to see how much each of the assumptions could affect the results, what assumptions are important to take into account, and that is what we need to know for our next chapter. In our next chapter, we're going to talk about sensitivity analysis. The sensitivity analysis is a tool that lets you vary each of your assumptions, or at least the most sensible of the assumptions, and understand how much does that affect to your results. So the same thing I did here manually, the sensitivity analysis does it automatically. So you begin with some sort of table that you need to tell the Excel how much could vary each of the assumptions and see how that translates in your results. And of course, in your results, you could have a graph too. Instead of having year 1, 2, 3, 4, 5, what you will have here is the assumption that is varying from the lowest position to the highest position. Normally you do like 5 different levels and you use the middle one to be like your base position. So you have like very bad assumption value, then a bad assumption value, the normal or base, then you have a better value, and the best of all. Okay, so it's with these 5 different values and keeping all the other assumptions constant, then you will see how that particular assumption affects your results. Of course, we will need macros for that, and I will love to help you understand how does the macros work in your worksheet. So thank you very much. That's all for today, and we'll see you on the next chapter. Don't forget to subscribe. Thank you.